Good morning, guys. Welcome to this Thursday, May 22nd, and we're starting off with some weakness, aren't we? So yesterday we had a pretty good selling. We had pretty good selling, taking us lower, and I mean not the bargain hunt rally at the end at all. A little bit of retracement, but not much. And they didn't get back up above the 58.90, even close to it. So we are right back down here in this lower range again. The reverse retest in the 58.30s. And this is all about that 20-year auction from yesterday in the market, freaking out about it. And right now we had some good news. They passed the bill from the House, but it's and the market's not paying attention to it, looks like. Uh, that's pretty much it we had going on overnight. The news for this morning. Let me see. News. We had at 8:30 we get jobless claims, Chicago Fed National Activity Index. 9:45 we get PMI composite, existing home sales at 10, and that's about it. A 10-year auction at 1. But I think this whole weakness, depending on the 20-year auction, the result of the 20-year auction, is definitely still seems to be hanging over the market, and the pressure seems to be to the downside to get started this morning. So we'll see. They take out this ledge right now, the 58.35s here and the 30.35 level. We are going to be in a spot where we can retrace all the way down here to the little gap up we had when this whole thing started happening in beginning of May. So let's see how this is going to go. But I want to start off with a slight bias to the downside, or with a bias to the downside. If they trade up above that 58.75, which is the session high and the London high, go back range bound at that point. And if they start trading above that 58.90, I would maybe start thinking about the long side again. So we're down here at the key support area. If they keep going to the downside here, they start taking out support and they can't get up above the session highs. I think we are maybe in for a rundown here to test this gap opening at the 57.30s. That could be a pretty ugly day, or ugly few days. We will find out. But at this point, there's no point. At this point, we are down at the support level, so we're starting off from the short side, looking to retest that low, potentially take it lower. Just be mindful you are at the support level. So if the 58.35, the one they just ran down and bounced off of, comes out, I would just stay on the short side and look for a rundown all the way down here to that 57.30. Try to find a spot to get short. See if you can manage not to get shaken out of that trade. But that is kind of what it looks like. So I would be looking at selling against 58.50s, 58.60s up to that 58.75 level for rotations back down. So that's the way I'm looking at it. So I'm looking for short setups against 58.50, 58.60, 58.75 for rotations back down, starting with a short bias on the ES. Let's see how far they're going to want to take this. And as you can tell, something happened here around 7. It looks like some the algos start kicking in, a little bit of reaction, and then boom, 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 everything starts kind of heading lower. We'll see. I mean, we may get just a little bit of a strength going into the open, but I would just watch it very carefully. You start seeing that continuous selling pressure. Just stay on the short side, try to find a spot to get short. Good trade location, best trade location you can get in the circumstances. I mean, you can see on the way down here, the only shot you had is kind of aggressively selling this pop up here. That would be the only shot you had for trade location. Otherwise, you kind of have to sell it low or somewhere intra-bar and hope for the best. Not a great thing to do because you never know when it's going to stall, especially when they trade down like this. You have support areas you have to get through. So chasing it on the way down always, or chasing it on the way up is just not a good thing to do. But sometimes you have to. It's just if the pressure is on there, and you just get the sense if it's as a continuous selling pressure going on, that's kind of what you have to do. Either that or kind of sit on the sidelines, instead of kind of shooting from the hip and just getting in. That usually gets you the worst trade location. So starting off from the short side, watch that upper edge, 58.75. If you can get up above that, let me go down here a little bit. If you can get up above that ledge in above that 58.95, ledge and starts trading up here, then we may have a shot for a little bit of retracement above that 59.10, these single prints. I think we are back in action again, but at this point, it seems like the bears definitely have a firm grip firm grip on the situation. So we'll see. And it feels very much when it starts off like this, and you see selling going into the late overnight like this, especially what they just did here, then I would say the short side is the one to stay on, at least to get started. All right, Nasdaq and the bonds, and one reason for this whole thing is obviously bond market. You can see here it's not having a good day at all. They taken out the 110.24, and we are pretty much in price discovery to the downside now on the bond. So the yields coming up is most likely having this effect on the market. So we talked about that yesterday. If the yields start taking out these lows, this definitely going to have an impact on the stock market. And right now you can see here we had that little pop down initially, nice retracement. I thought we were this was a one-off reaction on that Moody's downgrade. And then the 20-year auction kicked in, and now it's been, as you can see, it seems like the bond market is having an issue. And I think that's what probably mostly was weighing on the markets. So trade bonds on the short side. Let's see how far they can take it on the downside. But we're pretty much in price discovery, getting down to those price levels I haven't seen for a long time. So, and the yield's definitely coming up. Now, if they can get up above the session highs at 111s, go back range bound, but I would look to sell strength at this point against the well, actually they kind of messed up my levels a little bit down here, but I would start my short setups against the 110 16 to 18 against the 10 23 24 and the 111s for rotations back down. So these three resistance areas. This area used to be looked a little better, but I guess they kind of messed it up a bit. So 110, 16 to 18, 23, 24, and 111, the buck. You look for short setups. If they start trading above the 111, start thinking about go back range, but at least take off the short bias, at least for the day session. But you can see here that this is just not a good sign. Bond market is having an issue. Bond vigilantes may be back. It will be a bad day. Nasdaq to the downside as well. They were actually doing pretty good here on the in the overnight, and then right now, right, this late in the stage, late overnight, you started seeing the selling, took it all the way down here to the low of the yesterday session, and then some 21,060s. And just watch out below. I mean, I have unfortunately I had to rebuild my chart. I got missed my split here. I did something yesterday, I guess, so I screwed up my split. But you can see we are down here in the single print area, and we can start retracing this. We could get pretty ugly if they start heading down this path. And we can find ourselves. Here's your gap up. We have support down here at the 20,007 and then at 20,300. So we can see a day here where they retrace these single prints. You can see how bad this day is going to get. But anytime you have this overnight action when it starts heading lower like that, unless you get a complete reversal right from the open, we're probably in for a pretty weak day today. So looking to sell strength on the Nasdaq at this point against the 120s, 21 170s, 21 240s for rotations back down. If they can get up above that 240s, take off the short bias, go back range bound. So looking for shorts against that 115, 120, 170 up to that 230 to 40 area for rotations and back down again. And above that session highs or London high, take off the short bias. Look for retracement trades. We'll see how good it gets, but it's at this point, that's the the only thing we can do at least to get started. But this starts off like this, it's just not a great sign at all. So unless this reverses pretty darn quick at the session at the open, we're probably in for a lot more selling. All right, looking at the Nasdaq, or sorry, Nasdaq, looking at the oil and gold markets, and gold is like all over the place. So gold And my capital flow on gold, where is that at? Capital flow on gold. They were way up here to that attractor at 33.40s. Now they backed off quite a bit from there. Backup looked like they're pretty darn strong. Yesterday was a good strong day, and as I said yesterday, look for moves higher in the overnight, and that's exactly what happened. They took it higher, and took it all the way up here to the 33.46s, and then complete kind of fell apart after that. It's my capital latest. So all the way down here to the 32.80s, and now they're backed up right back up here to the 33.20. So gold is doing a number on itself, that's for sure. A lot of volatility going on there. So is it back to safety, or is it just freak out about the bond market? What is it? Hard to say, but you can see all gold is moving like crazy, and this is volatile. So probably not going to try to engage this very aggressively at this point. So these bars right now there is like 550 up to 850. So they're like, I say good 30 ticks, 40 ticks big. So that's just the overnight. We'll see what happens. But it's at this point, I would stay range bound on gold around that 3300 level. And we'll see if it can hold that or not. And if you see them, because so right now they ran it down and right back up here to the 33. So here's your attractor area, 33.20 to 30 up to the 40s here. That's your general attractor area. It's not a straight shot. You can see on the capital flow, it's the high volume area is a little bit higher, but this whole area of volume from the 33.05s up to the 33.40s. So no obvious high volume. No, the best one is up here at 33.40. So a little bit below that one right now. But watch that volume edge down here at the 33.05s. If it starts trading below that one into this low volume area, I think we can run it all the way back down to the 32.30s at this high volume area right here. So anyone's guess, but I would start off range bound on gold. The fact that they took it higher, then right back down, then right back to the middle, just tells you that it's not really directional. It's very volatile, but not directional. And then oil, and backing off a little bit down here to the 60s. And in the bigger picture, oil is doing what? It is in the capital flow picture, oil is pretty much, they were up here against the highs, now they backed off and then heading back down here to the lower end of the range. But they're pretty much trading around this 61.80 to 62 level so far. And if they keep going lower, I would start leaning in on the short side, see if they can run it down and test that 58.50 level. But at this point, you're still looking to buy against these support areas on the way down here until you take out that big ledge at 57.50s. That big ledge comes out, I would start thinking about the short side in a much bigger way. So at this point, we'll see where oil is going to go, but they're not quite outside that attractor area range. They're still just trading around it, so they could see if they can't take it lower by now or early on here in the session. I think we may see as the retracement back here to that 61 attractor area, that mode right up here. So starting off range bound, looking to buy against support at this point, at least against the 60.50, 60.20 down to the 59.90. I would say below that 59.90, I would stay on the short side at that point to see how far they can take it. But there could be a buying opportunity here for rotations back to the main. And early on, if they see some early strength, I would look for a short setup against the 68.90, 68.20 for rotations back down, but not more aggressive than that, because it's if they start trading above that 61.20s, I think we are right back to value again. So early on, looking for some early weakness to see if they can take it lower, and if that holds, look for rotation back to the mean. All right, so that is that's oil. So oil and gold. So range bound gold, range bound oil, that is to get started. Look for early weakness on oil. And back to the ES. Right now, yeah, well, one day lower. We're gonna have another pop to the downside, same in the Nasdaq. So yeah, it looks like we're gonna get some weakness going on here. So stay on the short side on oil or stay on the short side on the indices at least to get started. And let's see what happens here at the open. So Alrighty, get ready for a roller coaster. At least it could be a rough day today. We'll find out. Alrighty, guys. I'll see you back at 11:30 for the next update later. I was going to say good trading. If you decide to engage this, good trading.